Welcome to the Nifty Noon podcast. Really glad you can join us today. We're doing a deep dive into what was, well, a pretty fascinating week in finance and digital assets back in early to mid-April 2025.
That's right. We're working off these Nifty Nin newsletters you shared, looking specifically at that period.
Exactly. Trying to really get our heads around those dramatic market swings, especially the ones tied to the U.S. tariffs, and also some really intriguing stuff happening in crypto and NFTs around the same time. So, yeah, let's get started.
Sounds good. It was definitely a week packed with action.
Okay, so our journey really kicks off around April 7th, 2025. That's when the U.S. announced these Liberation Day tariffs. And they weren't small scale, were they? They hit essentially every country.
No, it was broad. And the immediate market reaction, Nifty Noon put it quite vividly, didn't they? The greatest market dump in recent history.
They did. And they drew that comparison to the COVID crash, which really says something about the scale of it.
But, and this is key, Nifty Noon highlighted a difference. Unlike the pandemic, this felt self-inflicted, as they put it, driven by policy, not an external shock.
Right, a really crucial distinction. It wasn't like a virus appearing out of nowhere. This was a deliberate policy choice with pretty immediate consequences.
Exactly. And while the proponents, likely hope for some short-term pain for long-term gain with new trade deals, the general consensus Nifty Noon reflected was, well, significant risk for the U.S. economy, too.
And we saw that risk play out fast. April 7th. Immediate, significant dips. Global equities, crypto markets, too.
That echo of the COVID crash was definitely there. Nifty Noon reported the NASDAQ 100 futures, I think, plunged over 5% just at the open.
Yeah, sparking those Black Monday fears almost instantly. It wasn't just a U.S. story either.
No, not at all. Global impact. The Chinese stock market, Nifty Noon said it fell 10% at its open. That's huge.
Huge. And Japan.
Even more dramatic, maybe.
Yeah.
Trading on the Nikkei 225 futures actually got halted. Circuit breaker tripped.
Wow, just to stop the free fall.
Exactly. And the S&P 500. Pre-market futures suggested it was down, 14% in just 3 trading days?
14%. I mean, that really paints a picture of the sheer panic, the scale of that initial shock.
It really does. Just shows how interconnected everything is.
But, okay, amidst all this gloom in traditional markets, the crypto world had some, well, interesting pockets of activity, didn't it? It wasn't uniform doom and gloom there.
That's a good point. Take the Bitcoin Fear and Greed Index. Nifty Noon reported it hit fear at 23. Bitcoin's price was around $75,110.
Which is down, obviously, but maybe not the total capitulation you might expect given the equity carnage.
Right. And then there was the ETH-BTC ratio hitting a new 5-year low. That's quite telling.
What does that suggest, potentially?
Well, it could mean a few things. Maybe a flight to perceive safety within crypto, so back towards Bitcoin's store of value idea. Or maybe something specific happening with Ethereum causing relative weakness. But definitely a sign of shifting sentiment within crypto itself.
And contrasting all the fear, you had that comment from Treasury Secretary Scott Bessent. Nifty Noon flagged it.
Yeah, Bitcoin is becoming a store of value. Quite a statement to make right in the middle of that turmoil. Offers a different perspective. A bit of underlying confidence, perhaps.
Definitely. And there was actual activity, too. Nifty Noon mentioned, what was it, $100 million in Bitcoin on base.
Yeah, on base. Coinbase is L2. And this was from Coinbase customers borrowing USDC stablecoins against their Bitcoin.
So even with the markets tanking, people were still actively using DeFi protocols, borrowing, moving assets on-chain. It wasn't like everyone just froze.
Exactly. That $100 million figure, it's significant. It shows the underlying crypto infrastructure, especially DeFi, was still functioning and being utilized for, strategic moves or managing positions, even while broader markets were freaking out.
Okay, so the week wears on. This wasn't just a one-day shock. By April 9th, the Nifty Noon headline was pretty bleak. The tariff dumps don't stop. Can anything save the market?
Yeah, that headline really captures the mood shift, doesn't it? From shock to this, like grinding worry. Continued weakness in U.S. stocks and investors getting really nervous about how long this trade war, President Trump's trade war, might actually drag on.
It wasn't looking like a quick V-shaped recovery at that point.
Not at all. The analysis then suggested folks were realizing these tariffs weren't just talk. They were having real negative impacts, and there wasn't a clear positive catalyst in sight.
And April 9th itself saw some wild action in the S&P 500. Nifty Noon called it the biggest intraday reversal in history. Rallied then just cratered to close sharply down.
Exactly. That kind of reversal, it screams anxiety. Yeah. Like investors want to believe in a balance, but there's just no conviction, and any rally gets sold off hard.
And the cost, over $1.5 trillion wiped off the U.S. stock market in one day.
Just staggering. Really underscores the volatility and how much damage that tariff uncertainty was doing to confidence.
And then you had the political rhetoric layered on top. Nifty Noon noted President Trump saying China wants to make a deal badly, but also reports he signed an order to increase China tariffs by another 50%.
Right. I mean, that doesn't exactly sound like de-escalation, does it? It suggests a hardening stance, which would just fuel that market uncertainty. Shows how much those high-level statements and actions were driving sentiment.
And this pressure wasn't just equities. Crypto felt it too on the 9th.
Yeah, the spillover happened. Nifty Noon's quick stats showed Bitcoin down over 4.5%, Ethereum taking a bigger hit, over 8%, and Solana down almost 7%.
So while maybe it showed some relative strength earlier, crypto wasn't immune when the broader negative sentiment really persisted.
It's definitely not. It shows crypto, for all its unique dynamics, is still plugged into the global macro picture and overall market mood.
Although even then you had outliers. Nifty Noon pointed out Standard Chartered. They were still super bullish on XRP.
Yeah, sticking to their guns. Projecting significant price increases for XRP by year-end and beyond. It's always interesting to see those high-conviction calls, even when the general market is down.
It's a reminder that within crypto, specific projects have their own narratives, right? Technology, adoption, potential.
Absolutely. Standard Chartered's view on XRP likely tied to specific things like its cross-border payment potential, separate from the immediate tariff drama.
Okay, then comes April 10th, and suddenly the whole narrative flips. Nifty Noon's headline: Trump hits pause on tariffs. Will markets hit play on the bull market?
Quite the turnaround. The report was President Trump authorized a 90-day pause on those Liberation Day tariffs.
And the market reaction, Nifty Noon called it an equally historic price bounce, basically reversing the whole downtrend just like that.
It was incredibly fast. Just shows how much that tariff overhang was weighing on markets. The pause was like this huge release valve for investor sentiment. Suddenly, maybe things wouldn't keep escalating.
And the scale of the bounce, Nifty Noon said, largest point moves ever to the upside for the Dow, NASDAQ, S&P 500.
Yeah, ever. That's how strong the relief rally was. Just a massive surge across the board.
And crypto joined the party. Bitcoin surged past $83,000.
Oh, yeah. Big time. It really felt like a coordinated sigh of relief across all risk assets. All that sideline cash, maybe short covering, it all flooded back in on the tariff pause news.
Now, something else interesting Nifty Noon mentioned from April 10th, VanEck confirming reports about China and Russia.
Settling some energy trades using Bitcoin.
Okay, now that's potentially significant, if true, and if it becomes a trend. It connects Bitcoin not just to market volatility, but to these big geopolitical shifts and trade flows, especially maybe bypassing traditional systems.
Exactly, and it adds a whole other dimension to Bitcoin's potential role maybe as a neutral settlement asset in a world with increasing trade friction. Definitely more than just a speculative play if that pans out. It's a layer of utility.
And for Ethereum, on the same day, the SEC approved options trading on-the-spot ETH ETFs.
Right. Another step towards maturity for Ethereum as an investment asset. Options bring more liquidity, more sophisticated trading strategies.
Yeah.
Basically making it easier and potentially more attractive for institutional players and others to get involved in a regulated way.
Okay, so that covers the big macro picture driven by the tariffs. But Nifty Noon also dug into some really specific crypto and NFT stories that week. Like on April 8th, this company Janover.
Yeah, the small software firm.
Right. They announced this pretty dramatic pivot, rebranding as DeFi Development Corporation, and their goal to be the MicroStrategy of Solana.
That is quite the ambition. Drawing a direct line to MicroStrategy and its massive Bitcoin treasury strategy, but focusing on Solana instead.
Bold. And it wasn't just talk. This followed an acquisition by ex-Kraken execs, right? And they plan to make SOL their main treasury asset.
Yeah, backed by, what was it, $42 million they raised from crypto investors.
Exactly. And the market reaction. Janover's stock reportedly just exploded, up over 1,000% on the news.
Wow. Okay, that tells you there's a serious appetite in the public market for companies making these kinds of big strategic crypto plays, especially in ecosystems like Solana. That MicroStrategy comparison clearly hit a nerve with investors.
Let's dig into that Janover story a bit more. Ex-Kraken people leading it. They weren't just buying SOL. Nifty Noon said they planned to buy Solana validators too.
which suggests a deeper commitment, right? Not just holding the token, but participating in the network's infrastructure and security.
And that $42 million backing came from some heavy hitters in crypto VC Pantera Arrington Capital.
Yeah, having names like that involved adds a lot of credibility. Shows strong belief in the team and the strategy. Raising that much via convertible notes and warrants suggests a pretty structured approach, too.
And the stock price closing up over 840% that day at $37.70. Just incredible enthusiasm. A really interesting example of TradFi, well, a public company anyway, diving deep into a specific crypto ecosystem.
Definitely one to watch, that story. A fascinating blend of traditional markets and focused crypto strategy.
Okay, switching gears to NFTs now. Also had some notable stuff that week. April 11th, Nifty Noon posed the question, is the alien CryptoPunk $10 million loss bearish for NFTs?
Yeah, the sale of Alien Punk hashtag 3100. Big number 4,000 ETH.
Huge ETH number.
Yeah.
But the catch, as Nifty Noon highlighted, was the dollar value, right? Because ETH's price had dropped since it last sold.
Exactly. So that 4,000 ETH was worth around $6 million USD at the time of this sale.
But the previous sale, the seller had paid less ETH, but ETH was worth way more in dollars then, so the loss was...
Reportedly around $10 million in US dollar terms. They've effectively paid something like $16 million for it originally in dollar terms and sold it for roughly $6 million.
Ouch. $10 million loss on one NFT? That really highlights the risk, doesn't it? Especially the reliance on the underlying crypto's price.
It really does, and Nifty Noon made that exact point. So many high-value NFTs, especially the OGs, like punks, are priced in ETH. So even if the ETH price of the NFT holds up okay, if ETH itself tanks against the dollar, you can still face massive USD losses.
They called it a denomination headwind, a potential big problem for the high-end, ETH-based NFT market.
Yeah, that was their take. It makes valuation tricky and adds another layer of volatility beyond just the NFT's own desirability.
Still, though, despite that headline-grabbing loss, someone did pay 4,000 ETH, roughly $6 million, for it.
Crucial point. It wasn't like it sold for pennies. There was still substantial demand, a multi-million-dollar transaction.
So maybe not the end of the high-end NFT market, but perhaps a recalibration, a sign that maybe those peak bubble prices weren't sustainable, but there's still real value perceived by some collectors.
That seems like a reasonable interpretation. A cooling off, maybe, or a price adjustment rather than a total collapse. Clearly, someone still values that digital scarcity in history quite highly.
And Nifty Noon, throughout that week, also touched on lots of other things happening, right? Beyond the big tariff drama in these specific stories.
Oh, yeah, absolutely. They covered a whole range ETF filings for other coins like XRP and SUI, stuff happening in the Solana ecosystem beyond just Janover, the emergence of Bitcoin runes.
Runes, yeah, the new token protocol on Bitcoin.
And just general activity across different NFT marketplaces, it really gives you a sense that even when the macro picture is dominating headlines, the actual building and innovation within crypto and NFTs just keeps going.
It's a good reminder the ecosystem is broad and constantly moving, even if one big narrative takes the spotlight for a week.
For sure. Those micro events are key to understanding where things might be heading long term.
Okay, so wrapping this up, looking back at that week, April 7th to 11th, 2025, through the lens of Nifty Noon's reporting, it was definitely a roller coaster, heavily driven by those U.S. tariffs, the announcement, and then the pause.
Yeah, the impact was undeniable.
Mm-hmm.
Ripple through global equities, crypto, NFTs, everything felt it.
And that speed of reaction, both down and then up, it really highlights how sensitive markets are to trade policy these days.
And how interconnected traditional finance and digital assets have become. They don't operate in totally separate bubbles anymore.
Also, Bitcoin's performance was interesting, wasn't it? Some resilience during the equity dip, then that strong rebound. It keeps raising questions about its evolving role. Is it just risk on or something more?
That's the ongoing debate, isn't it? And the Vanek report about energy trades adds another layer to that question.
Then you had the specific bright spots, like the Janover pivot to Solana, a real example of traditional structures embracing crypto ecosystems more deeply.
A potentially powerful trend if more companies follow suit.
And the alien punk sale, a reminder of the volatility and complexities in the high-end NFT market, especially that ETH dependency, but also proof that significant value is still being exchanged.
Right. Challenges, yes, but not a dead market by any means. A market that's still figuring itself out, perhaps.
So this whole period, analyzed via Nifty Noon, leaves us with some big questions, doesn't it? Like, what are the long-term effects of these kinds of trade policies? How will crypto markets continue to mature and integrate? And where is the NFT space ultimately headed?
Yeah, lots to think about. It was a week that packed in years' worth of dynamics, it feels like. Hopefully, this deep dive gave everyone a clearer picture of those events and maybe sparked some more thinking.
We hope so too. And of course, for anyone wanting to stay constantly updated with this kind of analysis day to day,
Definitely check out niftynoon.com. They provide really in-depth analysis and daily updates covering all these spaces. It's a great resource.
absolutely, that's niftynoon.com for the latest. Well, thanks for joining us for this deep dive today. It was certainly a week worth dissecting.
It really was a fascinating snapshot in time. And yeah, keep an eye on niftynoon.com for ongoing insights.
Thank you for listening to the Nifty Noon podcast.